Hello Cypress Ridge, this is Will Taylor with the Reserve Team of the Homes Finder Realty Group, and today we are going to be taking a look at the August 2023 Real Estate Market Report. As always, we're going to be taking a look at inflation rates, mortgage rates, and some MLS data of how all of this applies to Cypress Ridge. So without any further ado, let's go ahead and jump right in. First up is monthly inventory. Now this is for all of Bluffton, and we are steadily at 4 months. We have been at 4 months for the last 4 or 5 months. We have only had a break from this over the last winter when we did hit a high of 8 months. So it'll be interesting to see if that comes back for this upcoming winter. And let's move on to mortgage rates. I have no good news if you are looking to buy a home. As of August 24th, 2023, we're at 7.23%. It's pretty much the highest that it's been in the last year. If you're an investor, it's not going to be any good news here either. I saw 2 quotes this past week for just about 8%. I have seen a good deal though. There's been one. DHI Mortgage, as many of you know, will finance new construction DR Horton homes, and they are offering an FHA 30-year fixed rate loan at 5.5%. So that's a pretty great deal. It will have a huge impact on your monthly payment and also allow for more buying power. So let's take a look at inflation. In general, inflation continues to rise, and the main drivers of all things except for food and energy is shelter. The other big 2 pieces are motor vehicle insurance and education. However, the good news is there are a few things that are going down on the inflation index: airline fares, new cars, used cars, and communication. One important note here for all things except for food and energy is that shelter has increased 7.7% over the last year, and that's responsible for over 2/3 of the increase of everything except for food and energy. Meaning, the higher the home prices, the higher the inflation, and this causes a problem. I'm going to coin this the inflation paradox. As home prices increase, it drives up inflation, but largely our mortgage rates are based off inflation. So our mortgage rates are increasing as a result of the inflation, which is due to the increased housing prices. And the only remedy here is housing supply. As we build more homes, we will open up that supply for the huge demand, and we should expect things to cool off just a bit. There's a great example of this locally in Latitude Margaritaville. There was an astronomical demand for the neighborhood, and they were taking 2 to 3 years to build a home. The resale market exploded. I go into all that in great detail. That's linked on screen there. So the main point here is we just need more homes in order to keep up with the huge demand that millennials bring into the buying force of the housing market. Nationally, there's 1.42 million homes that have been started in 2023, not seasonally adjusted, and 1.68 million homes under construction as of the end of July, again, not seasonally adjusted. It's unlikely that a crash will happen because homes take time to build. However, if for some reason mortgage rates were to drop on a dime tomorrow, housing prices would skyrocket. A great way to get around the ambiguity of the housing market right now is to buy a new construction home where you can lock in the price of your home and your mortgage rate and start to plan for the future knowing what your fixed costs will be. So let's take all of that information and apply it to Cypress Ridge. In August, there were 9 new listings that came to market. This is right on par with the 7 to 10 that we have been seeing for the last year. Moving on to the median days on market, we're at 9 days on market in August, which is pretty much right on par for how we've been for the last year. Things are going quickly. And then moving on quickly to the closed price to original price ratio. So this is the price that the home sells at compared to that first list price before any price reductions, which still do happen. And we are right around 100%. Our last sort of dip here was over the winter where we saw on the previous chart, we were up at 8 months of supply. We're right back up to 100 and steadily above 98%. Now, if we break the days on market down by price point, we actually see that we're going 7 to 14 days, and the lowest price category here, that 350 to 400, hasn't had any new sales in the last month, so this is actually the same as it was the month before. As some of the under contract homes come to close, this will adjust next month. Taking a look at the price ratios by sales price, again, that lowest price point has no new sales, so that's the same as last month, but the rest of the categories are steadily above 98%. just about the ask price. So let's take a look at what sold in August of 2023. There were only 3 home sales, which is actually the least that I've seen in the last year. But what's important to note here is that your average sale price per square foot was at $247. 2 of these homes are in the reserve and the other is outside of the reserve. And if you're in the reserve here, you can see that your sale price per square foot is significantly higher. It's also a general rule of thumb that the larger the home is, the lower the cost per square foot. And you can see that in the data here. And all of these sold right around 100% of the ask price. So there's a lot of homes that are actually under contract right now. We have 13. And if you remember from a couple slides ago, there were only 9 new listings for the last month. So that means that there were a few homes on the market for a long time that got nabbed up. I just want to direct your attention to the circles on the right here. There are actually a lot of townhomes that are under contract right now, and these are great options for first-time home buyers or investors. Now, as of today, there are only 3 homes that are available for sale. That's nothing. We have a ton of homes in this community, and we've seen 9, 10, 12. We're at 3. This is, again, the lowest that I've seen. But what I find interesting, these homes have all been on the market for a higher amount of time than the median days on market. And then also, just to take a look, the median list price per square foot is $180. If you would like a full list of everything that is available and coming soon, my contact information is on screen and I can get that for you. So let's wrap this up. Locally and nationally, there is still a shortage of housing supply, and housing on a national scale is a large driver for inflation. So we need housing supply to catch up to demand in order to get that mortgage rate relief that everyone is asking and looking for. However, as mortgage rates go down, we should expect a lot of buyers that have been sitting on the sidelines to now jump into the market. So I would expect an influx of demand there. If you are a buyer looking to buy a house, the resale market is still really competitive. A really good option is to look at new construction communities. There's not as much in Bluffton as there used to be, but there are great options at the Retreat at East Argent, Jamestown Estates, which are both in Jasper County, and Salem Bay, which is a Pulte community up in Beaufort. I just went last week. It's beautiful. If you are in a position where you have a home to sell, I would just consider, it's hard to say what's going to happen with the market as a whole, but if we continue on this trend for the next few months, I would expect home prices to continue to climb until inventory is caught up. And if you're 55 plus, like I mentioned before, there's been a lot of big changes in Margaritaville, so don't forget to take a look at that video that's on screen there. Thank you for tuning in, and I will see you next month.